good morning, good morning. Let me get my screen share started in Discord. And let me put the link everywhere for everybody else. What is all this? Sorry, I just got to catch up on something real quick. Okay, sorry, let me just put this in the chat. How's everybody's morning? We have a pretty low volume morning again. So I'm not really, sorry, I'm just seeing stuff. I just got to ban some people, guys. Sorry about that. There's some weirdos that are trying to scam people. All right, let me get the comments open here. All right, so can you guys see my screen okay? If you can, please put a 1 in the chat. If not, please put a 2 in the chat, just so I know. First of the party, trash got me into trash the husband got me into something early. What happened? What happened was RUBI. Okay, well, let's take a look. So I'm on TradingView today as well because I want to walk you guys through some stuff. RUBI. Okay, so yeah, this one. I mean, I had pretty good volume into the market up and ramp up here, but this box right there and maybe this guy, that's pretty big though. So yeah, there's a couple zones down here that I like, but yeah, it looked like it just kind of didn't continue, right? And that's, you know, it happens. Now, what's more important is how did you handle that? Like, were you able to exit safely, or are you still in it and kind of looking for maybe a second buy, or just kind of waiting for you're still in it? Okay. Do you have an exit plan so that if it does go down, you know, beyond a certain level that you're out? Or Juju said he's waiting on a second buy. So it makes sense that you don't stop out if you're waiting for a second buy. If you want the drawdown and if you are comfortable with that. Okay, so it looks like you guys are just looking to add in. All right. There's nothing wrong with that. You just have a little extra stress, right? Till that resolves. So not the end of the world. It just kind of gets a little bit stressful. You know, so in this case, right, we've also got, you know, we got KNRX, right? That's another one that's just popping up and halting. That's not doing anything good. Let me just pull this up here real quick. TRNR, I like this one. You know, this is one that we've traded a bunch in the past. So what I want to do today is rather than just jumping in, you know, to the #1 runner of the day, you know, we can look for something specific to happen. And that is that we wait for the initial move to happen, and then we look for a retrace off of that move. So that's what I'm going to look for today. Sorry, I got to push a bunch of buttons on my end here. And then down here, we do that. Okay. So sorry, guys, I just had a little bit of button pushing to do. Let me get my Discord pulled back up and this over here. Okay, sorry, my buttons are a little bit, like my keyboard isn't working, my Windows key isn't working, so I'll probably have to restart my computer. You know, like the one day you trust him and let him trade. Oh no. Well, it's all about the exit, really. It's the entrances happen, you know, for whatever reason, and you're gonna have a profit or a loss either way. Really just kind of depends on how you exit. So in this case with RUBI, right, what I want to see happen is, let me just draw it out. Okay, and this is the only thing I'm going to be looking for on a stock like this. And this is it's a strategy you guys can use for pretty much every impulse that you see. So in this case, the opening impulse was to the downside here. Let me make that like a brighter green. So right here, we've got to move to the downside. Right now, I want to see that impulse end, and then I want to see a retracement, right? And then that retracement is going to be, you know, one of 3 types. well, maybe 4 types, I guess. You're either going to have a shallow pullback, right? That's going to hit, 25% pullback, 90% of the time, right? And that's one that we know that we can bounce. We can trade bounces on larger impulses with tiny candles at the bottom. Otherwise, it's going to be a healthy retrace where we get 50 to 60, 61.8% fib, 61.8. And then there's going to be a deep retrace, which is, greater than 61.8. So 61.8. And that includes, reversals where it breaks into a new high, right? So all I care about today is just looking and seeing where that fib or where the retracement goes, right? So far, we're forming new lows from candle to candle. The impulse is still pushing. So there's nothing to do yet. So I'm just waiting for that to end. Once that ends, we'll know exactly where our bottom is, right? And then we're going to know where the top of the retracement is, right? And then we can establish a range based off of that. That's just like the opening range break, but we're just taking a slightly different approach. And this is something that you can use for any impulse retracement, right? So if you're someone who doesn't like structure and you're just trading volume, you can trade this kind of expansion and contraction of price instead, okay? Is there any lake? Is there any sound, or is it just my PC that's not working? Let me get the YouTube link in here for that guy. All right, there we go. Anyone who's having audio issues, obviously you can't hear me say this, but check that link. Okay, it was your PC. All right. Okay, so does this make sense? So right here, right, we don't know that this is the bottom yet until we get at least this candle and the next candle that have higher lows, right? In order to have a validated low, okay, we need 5 candles, right? And this one here has to have no competition on the left or right for at least 2 candles. So you can see there's a little gap right here. All right, and this is the most important part of this because you want that pivot, okay? No pivot, no end of impulse. So we're letting the market play out a little bit. We've got another, minute 40 so far. So we're just letting it go. And then we're just waiting to see where it bounces, right? And it's going to take some time, unfortunately. So let's see what TRNR is doing, because I like that one too. All right, so this impulse is going to the upside. So this is the one that I like. I like the impulses that go to the upside, get a retrace to the downside, and then a reversal of that retrace or a break of that zone back to the upside. So in this case, we're still just pushing up. So there's nothing to do unless you just want to scalp the volume. So let's just wait. So right now we've got a clear high right here. So this is a validated high. It's a pivot candidate, but without the 2 candles to the right that don't break over that high, we don't know. All right. So for RUBI, I'm looking right here and I've got another 2 minutes or minute and a half for this to form, right? Then I can look for another pivot with a high, right? So I've got the low, now I need a high. And then I can measure that with a fib. So if I come down here to a fib, we've already hit the 25% pullback so far. So there's no trade there yet, right? Because we're not looking for that 25% bounce because this is a very short impulse. For that, you need like a dozen or so candles to the downside. So more than 5, usually like 8 to 10 candles. So in this case, in the next, couple, I'd say the next like 50 seconds, if this doesn't break below this yellow line, then we have our pivot and the impulse is over, and then we can establish a range on the pullback. And while we're waiting on that, I'm gonna reset. This is a paper count that I have connected here just to show other stuff, and I was trading SPY equity. So let me just reset this. We'll put it down to like a realistic amount. We'll do maybe 5K, right? And then US dollars, reset. All right. So brand new fresh account. We're pretending that we have a $5,000 cash sitting on the side, and we're just going to be looking at these two stocks. Okay. It's REBI and TRNR. So because I need this new fresh candle on TRNR, I know I have at least 2 minutes here. And this one here is now formed. It's a valid pivot because I've got two candles on both sides that are now closed with higher lows. So now I'm looking for the top of this range. So I've got the impulse, and then I've got the retracement. Now I can measure that retracement by moving this over here. Okay, might be a little hard on the eyes. That's why I don't really like using this tool on this platform. But after this forms into a pivot, right, then I can draw the top of the range, and then we can just trade the breakout of that range up or down. Okay. So now I know that I need this candle to close, which is going to take less than 2 minutes because I'm on the 2 minute time frame. Then two more candles to form, which don't break over this high. Then I'll have my range, and then I can look for a trade out of that range. So TRNR is going to validate before that if this candle here doesn't break over this yellow line in the next 50 seconds. So all I'm doing is waiting for price to discover its limit. That's all we're doing here. Once it does that, I'll know exactly where the decisions have been made for the day, because this is the ask pressure limit if it pulls back down, meaning that's as far as the pressure on the ask was able to push it so far for that initial move. And then I can look for the pullback to see the response to that. So right here, we just broke over it. So that means that we got to wait another 4 minutes plus whatever this candle is, 4 minutes, 20 seconds. So I'm just letting it expand, right? That's the only thing I'm doing right now. I'm just letting it expand. So now for Ruby, right, we automatically got a lower low, which means that this becomes the high, right? So I can get rid of the fib here, because you can tell it didn't even hit the 50%, which means it's a shallow pullback, which means we're likely to see more downside. There's no guarantee on that, but that's what the range is telling me so far. So now the setup here is going to be a break up or down out of this range, and then we can just take low risk opportunities in the direction of the break. This is a high risk opportunity, so it's way too big, because my stop loss my buy stop would have to be up here. My entry would be down here. So we can always just wait for it to come back into the range, and then just trade it from there. So what I'm looking for, let me just draw this out. Okay. And this is just simple range break stuff. So we've got this level here. We've got this level here. If it breaks to the upside, we can trade that. If it breaks to the downside, we can trade that. Either way, we don't want our stop loss to be huge on a situation like this, right? Because it is a range. And if the volume falls off, right? Like let's say we got volume here. As it starts to push, as the volume increases, that's good. But then when that volume falls off, remember, these act like magnets, so it might pull the price back into the range, and I don't want it to, have a huge risk range if I'm trying to get in there. Okay? So for right here, specifically what I'd have to look for, let me just erase all these, is I'd have to look for the price to push in and then break back down to the downside. And then my stop loss ideally is like right there. Does that make sense? If it pulls back up and then wants to go to the upside, I'll just trade it there instead. But my stop loss will be like right here. So if I get a huge candle breaking out like this one, I don't want to touch that. I want to look for the response to that big candle and then a response to that response. So it seems like a lot of waiting, right? And it is, and that's a good thing because we want to make sure that we have disciplined entries. But that's where we get our best trades. So this is different than the box strategy. The box strategy is it's more concentration oriented, meaning that this is where these big moves stem from. And this is more just dynamic expansion and contraction of price. So this is a little bit easier to identify on the spot, especially when the volume is high and there's strong market conditions in both directions. Let me just check TRNR as well. All right, so we got yet another higher candle here, right? So we got to wait another 4 minutes, right? Because we got to wait for the next two candles. And then, of course, if that breaks, then we got to move the line up and wait another 4 minutes. So yeah, we'll see. But in either scenario here, right? If we were to draw the boxes, our box would be here anyway, right? Because that led to this. Then we'd have another one up here, which led to that, and then that, right? So both are valid. We're just taking slightly different approaches to where those pivots occur. So right here, I'm waiting for the price to pull back up. Also, let me triple check that live stream here because I wasn't seeing comments earlier. What's up, Golden Clear? How's it going, buddy? Sorry, I had my comment window covered up, so I didn't see your message. How you doing? All right, so I'm back over to TRNR. So this candle closed. So now I need two more, which means I need another 80 seconds because there's 20 seconds left on this one. And now, right, if we want to draw our fib, right, from the bottom of the impulse to the top of the impulse, right, and every single one of these candles has a higher low except for maybe this guy. What's the low on this guy? 62.94, 63.01. Yeah, so right here that kind of breaks, but it's close enough. I wouldn't really throw a fit over that. But we've got a series of candles, each of which is very strong and moving to the upside, like as a general trend. And now we're seeing a response to that impulse in the form of price contraction, right? So I want to see the expansion, then the contraction. So now this is a deep retrace because it's below 61.8%, or sorry, 58%. Let me add that 61.8. There's like disable stuff on this. There we go. All right, so yeah, it's close, right? It's close. So that's our levels so far. So this might just be a perfect retrace, right? So at this point, this would become our range if this candle here closes in the next minute and 3 seconds without breaking out of these yellow lines, right? Or if it breaks over this one, over the top line, that automatically locks it in early because that means that the retracement is over and the price is resumed to the upside for continuation. Oh, what's up? You guys are still in that one. Oh, no. Okay. I mean, it is what it is, right? We can either be in something or we can be out of it. And if we want to average down and stuff, we're going to see red numbers. We're going to see drawdown, right? Because it has to happen if you're doing that. Now, you don't have to do that. But it's one of those things that's very difficult, to figure out whether or not you want to do it, right? The default answer is always, if you're new and you don't like risk and you don't like drawdown, the default answer is just avoid that at all costs, right? Because the whole point of this is that we want to keep our losses small. And one of three things can happen when you get in. Like if we just look like right here, for example, say you get in here, you place your buy, price goes down, you get a little pullback, and then ideally the price pulls back up. So if you add here, for example, for an attempted breakout, let's say you've got a previous high right here, and you're looking for the breakout. So you get in just before there, price pulls down, you catch the pullback, and then price rallies back up. Your cost basis is now down here. You break even at or above, and then you make your profit and walk away. The challenge here is that this part doesn't always happen. Sometimes you get this, and it just keeps going down, in which case your loss is bigger than your single buy would normally have been. Now, if you put both of these buys worth of money right here, all that extra drawdown would be very painful, right? And that's why we average down if we want to. So in this case, you're still managing your risk and you're reducing your loss. It's just not a small loss at that point because you're still allowing some money, which is this first buy up here, to travel a greater distance than if you would just stop out and then re-enter. So in the scenario where you get the price to move down, you're still reducing that loss. It just doesn't feel good, and it's a bigger loss that you have to recoup elsewhere. And that's what I'm saying. It's always optional if you want to do that. But if you're going to do it and you're making sure that you're, adding that second buy responsibly, you are still managing risk. So there is a silver lining there in that you're not hurting yourself too bad, but it doesn't feel good, right? So if you don't like those and they're not, fun and if it's setting you back too far to the point where you have to take, 2 weeks or 3 weeks worth of trades to offset that, then averaging down might not be ideal at just yet, right? Because remember, when we average down, we want it to be at least 10% down. And on these, garbage stocks, they don't always come back if they're that far down. So we got to be very careful when it comes to that stuff. Yes. All right. So in this case, for TRNR, right, I'll circle back to RUBI here in a second. But for TRNR, in the next minute 20, this candle here will close, and then that will solidify this range, and then I'll just erase this fib. But does everyone understand the process so far? We're just looking for that opening impulse, and we're looking for a mechanical identification of the pivot, okay? Meaning that there's two candles on both sides that don't break above a pivot or below a lower pivot. And then the retrace. So you're looking for the response to that impulse, and then for that to pivot as well. Okay, and that just establishes the range. It establishes the range for that opening move and its pullback. And then you can trade the breakout for continuation or reversal. Time for me to edit. Yeah, it happens, right? This is all part of the process. Is you discover what you like, what you don't like, what works for you, what doesn't work for you. And it's very important that, if you do want to average down and you see a bunch of red and maybe you end up taking a hit, right? You just got to take the hit gracefully and just understand it's part of the process, right? And it's also very, very important to not take any one individual result with any kind of serious weight. Like, it is circumstance, right? If you wanted to get in and the price went against you, so you wanted to average down, right? And you called it out ahead of time. It wasn't just a response to the price moving down. And then it kept going down. You don't control that part. You only control how you apply your risk. And in this case, if you're applying your risk efficiently by waiting for it to be down so far and then waiting for the pullback to start before you place that second buy, and then stopping out after you place a second buy, if it continues down, that's a successful trade. At the end of the day, if you're following your plan and you're managing risk efficiently while allowing volatility, that's okay in my book. It just means that you're going to have to offset it. But if you're adding that second buy because you see it move down red, especially very quickly, and it's just a reaction to seeing price move the wrong way, that's a different story, because that's more of a trading plan gap. Does that make sense? And as crummy as it might feel, days like today where those things happen, those are the best days, because you get the best data. It doesn't feel good at all, I promise, but that's where you get the best data. And that's where you can make the most progress, because you have very loud, very clear thoughts about what you did. and what you did is separate from what happened, right? So if what happened was negative, but you managed it very well, that is a successful day. If what happened was inefficient in terms of your P&L, and you also had deviations or were kind of led around by emotions, then that's a different set of data, right? Because that means that something is still influencing your decision-making that isn't the chart. Especially when I said I wasn't going to do something and still did. Yeah, and that right there, that's perfect. That's really good data. It feels like crap. I promise. It feels like you're it feels really bad, but you have to also understand that your brain wants to blame itself, right? It's neuroplasticity trying to crawl its way to the surface because it doesn't want you to take harm. I don't know why I said it like that. Your brain has a trauma response inside of it, and it wants to protect you from taking hits. So that little Hulk mode is going to come out and try to protect you. And if you're conditioned by seeing a bunch of historical trades that are red, the next time you see red, especially if it's a big number, all that trauma is going to come back. So it's tough, So you have to also use the data. Right? You're paying the market either way, right? And there's no guarantee it's not going to come back or that it will come back. Slap them up and teach them the right way. Oh no. Well, we got to get blame and accountability to go sit in two different rooms. You can have accountability without blame. And accountability is just determining, was my decision making based on, was it a response or a reaction, right? So in this case, RUBI has not come back up to the range yet. So there's nothing to do here in terms of looking for a potential short entry out of the range or a long entry out of the top of the range. If I were to look for a second ad, for example, you've got a beautiful setup right here, but it hasn't, it's still sketchy. It's still pushing to the downside. This is a very strong impulse. You got a lot of large red candles, so we can hold off on that. Let the bid side pressure have its time, right? And also, if you are averaging down, you still want to have a hard cut either way, just in case it doesn't come back. But for right now, it's still looking pretty bearish, right? There's no move to the upside yet, so we got to wait. It might come down here. It might come all the way down here. We don't know. What we do know is it's got spikes in volume, right? And that's a characteristic, but that volume is going to the downside for now. So there's no move to be made yet. Sorry, let me catch up on the chat here. Do you use the MACD to determine when to buy? Yeah, I mean, you can. So if you're someone who, let me just pull my Weeble over here for this one, because I want to show you guys kind of an easy approach to that. Okay, so let's look at TRNR, for example, right? You can add the MACD, and this is only really useful for like the first maybe half hour of the market, in my opinion. You see how the MACD is positive, meaning that the orange line's above the blue line. The orange line being the MACD, which is the separation. It's the absolute difference between the 26 and 12 EMA. And then the blue line is a smoothed average of that, so you can see the change in trend of the difference of the two AMAs. So it's a little bit complicated. But just understand it's a strength/momentum oscillator that moves up and down with the price. So in this case, if you're looking for continuations on strong volume, the MACD is very useful, because then you can just look for those opening moves. And then when you see that pullback start, you can, draw a line, and then this becomes like an entry threshold. And then the MACD acts as a filter. And then you can say, all right, if the MACD is still positive, when these highs start to be broken again, you get lower high, lower high. So right here where it breaks over, you can say, all right, is the MACD stacked positive or is it crossed to the downside? If it's positive, then we can justify taking an entry for continuation into a new high. And again, that's not a guarantee. But most of the time when you see that, it works out. But that's not every time. And it's the times that you don't prepare for that mess you up. So that's about the only time I use the MACD within the first half hour, because I don't trust the market conditions, and it's purely volume at that point. So we don't want to, we got to be very careful not to convince ourselves that there are absolutes in the market, because there are not. So in the case of TRNR, you can see we broke out of the range to the upside. So here we could consider taking an entry. Now I wasn't watching it, so I missed the entry on this one. But if I wanted to put on, where is it on? Yeah, trade days. All right, so let's just say that I want to build a position out, right, for this one. I could do $1,000, right, because it's $5,000 simulated account here. And then I can just do, I can do a market order. Screw it. So $1,000 market order. And then in here, I can also enable take profit and stop loss, right? So if I want to say take profit percent, and then I can just do, 3%, and then I'll enable this, and I'll make this a percent price, 2%. Now I just got to kind of zoom in and pay attention here, which is my hardest challenge because I'm streaming. Then I can just push this button and it'll buy $1,000 roughly, at market, which means I'll get filled wherever. But I'm shooting for about 73 cents, just over 73 cents. So we just got to hang out for a little bit and then try to be patient. And you can see the bid-ask spread on here is 73 cents down to 70 cents. So I'd really rather just get a limit order. But I want to just show you guys the general range on this. But because I'm using take profit and stop loss brackets on a paper account where I have a wider fill, just keep in mind that I might just get a sloppy fill on this specific paper account. Okay. So we just got to let it cook. Right. So at this point, right, this is where I'm not looking at 10 different tickers, right? I've laser focused in on the one that I want to watch, and I've got one specific thing that I'd be looking for. So let me just draw a line here on my other one. Right. And also, just so you know, 3% on 73 cents is what, like 2 cents or something? 0.73 times 0.03 is 2 cents. Yeah, so 0.22 cents. So basically 75 cents right here would be the target. So I'll just draw the line there, and then we'll just see if that gets hit. Because here it did, right? When it broke out, we hit our target. And that's all I would care about, is just getting those 2% or 3% targets. So it's pulling back down for a second. So let's look back over at RUBI. The momentum on this is slowing down a little bit, so we can start looking for, something. Now I need to make sure, I guess we'll do the price range one. I've got that guy there, and we're starting to pull back up. So this is probably where I'd place my second buy if I were to trade this, and I'd have a stop loss right here below this box, because I don't want this going down any farther if I just placed a buy. And that would be a very aggressive buy, because we don't really have confirmation that it's moving up yet. It's just slowing down, and then it's breaking over the high of the candle, which led into this this area of high potential, right? So it's okay, right? It's just risky, and it's already a risky move to the downside. It's a very strong move. Let me just draw some other boxes here just so we can assess the areas here. And then I've got this guy down here. And then this guy right here. That's kind of a big one, right? I don't like that one. I like this one down here instead. It's in the same area and it's smaller, so I'm going to default to that. All right. So that looks a little bit cleaner. Yeah. And then it's just a matter of where that lands. So we just come back over to TRNR. And you can see we kind of pulled back into the box, right? So what I'm going to do here is I'm going to replace these lines with a box. Okay, and I'm going to get rid of this fib as well. Does everyone understand the fib thing right here? Like the pullback was deeper than 61.8, which means that it's a deep retrace, which means we get our breakout, and then it's likely to pull back like it did. So right here to there is our range. So we're just looking for moves out of that range. And then down here, I've got 0.6096. Let me just add that. Times 0.03. That's 0.018, so 2 cents basically. So 58 cents would be our 3% target to the downside, just above 58 cents. I guess it'd be like 58 and a half, right? So that would be our target there. And then inside the box, we just have a 2% stop loss on both. Are you saying the fib is invalidated by the deeper retrace? No. The fib is just a measuring tool. It's not a prediction thing, and it's not a setup, if you will. A lot of people try to use fibs for prediction, and they use them for like pullback entries and things, but it's really just a measuring tool at the end of the day. It tells you whether a pullback is shallow, healthy, or deep, and then that gives you some insight into the quality of the move. And then you can just use that to determine the type of response that is likely to happen. It's not a it's between the 50 and 61.8, so let's get in. That's where people misuse it. And that's the same as like fair value gaps. They just misunderstand them. And then that usually ends up hurting them if they don't use them, if they don't enter correctly. So in this case, we've established our quote unquote opening range, and now we're just looking for a break. So since the volume is not super good, price is hanging out in the box. Yeah, I erased it because I already did. I just needed it to measure. That's all. Just to identify what kind of move we were looking at after this point in time. Like this is the impulse and retrace, and it validates right here. So then I'm just looking for a move, a directional move out of that area after that pullback happened. Also, let me just push some more buttons over here. Sorry, guys. Give me one moment. All right. Pushing buttons. All right. Gotta push all the buttons. All right. So TRNR is hanging out the box. RDBI, what are you doing? How's it going over here? All right. So at this point, I probably would have stopped out. I mean, you would have put your second buy right here. That's probably the best shot you would have had from this area, you know, and I don't really see anything special down here below there. Doesn't mean that it won't just magically reverse and shoot back up after we exit, but that's, you know, that's what if, right? We have to deal with what is. And in that case, you know, if we're up here and we had one buy, which is maybe a quarter of our account, that would have pulled down pretty hard without any kind of response from the from ask side pressure. So we don't know when that's going to happen, and we don't know if it's going to be significant. So rather than rely on if, and trying to access information we don't have yet, it's usually best just to stop out and take the hit and try to minimize that damage as much as possible. Because we can always re-enter, we can always make those profits back. But in this case, the range said we were going to the downside. You know, it broke to the downside, and you can see the kind of move that happens out of those ranges, and that's what I'm looking for on here. Now, in this case, you know, we just never came back and tested the opening range. We got our impulse to the downside and then the retracement, and then it just shot straight down. So unless we're trading that first move, there's just nothing to be had there. And same with this one. Like, it tried to break out of the box and then it just didn't. So this one's got a little bit more time on it before we even look for an entry. Elizabeth says, I think I need to listen to myself and not trust what he says all the time. Fair enough. Yeah, don't trust anybody when it comes to the market. I don't even trust the market, right? The chart is the only source of truth when it comes to the market, and you don't have access to the end result. You only have access to what you see so far, and you can only base your decisions on that. You can't base your decisions on anything else. But the best you can do is the best you can do, and we're human, right? So you're going to have extra input. You're going to have extra layers of analysis and decision making until you get to the point where you can just blindly obey the chart, because the chart, again, is the ultimate source of truth here. It's going to be right no matter what. So sometimes it's going to tell you one thing and then change its mind, right? Sometimes it's not going to tell you what you want to hear. Like, you know, with this one, like I want to jump in, you know, as a new trader, I want to participate, but I can't because the chart didn't tell me to. So I have to wait for this to break or for this to break. So at this point, you know, we're in the do nothing box. As a new trader, if I want to get in and I'm ready to push buttons, I have to sit with myself and figure out where that temptation is coming from. Why am I trying to make it happen? And that's where we got to focus. Just collect that data, and then all the rest of the trading stuff kind of cleans itself up after that. But if you're just focused on being right and pushing buttons and trying to, you know, get profits all the time, you're just stuck in the rat race that everyone else gets stuck in. Charlie says, so if strength candles cross past the levels, or rather cross over more than one in a candle, that tells you it's possibly stronger than the average move. I think I understand what you're saying. And if that's the case, then yes, but not necessarily, because you can have just wider volatility over a range. Yeah, I think I was just trying to visualize exactly what your scenario was. The fib is just a measuring tool. It just says you know, that we've had an impulse, right? You can apply a fib to any impulse. Oh, you don't have one? No, no. So in this case, right, we have the impulse, and then we're just measuring the pullback so we can determine the quality of that pullback. So if we look at this pullback, you can see we've got a decent sized red candle here, but it kind of accelerates into that and then stops, and then it shows a wick, right? So you get a slightly deeper pullback than 61.8. So that tells me that the likelihood of it pushing up is a little bit lower, right? And it's all just, it's probability, right? There's never any guarantees, so we can't use that. But I can use that as a filter. Anything below 61.8%, I don't have to trade for continuation if I don't want to, because I already know that there's just a little bit more bid side, at least in that moment of the pullback, than there is on the ask side. So I can always just pass on those if I want. So RUBI, let's take a look at that one. We're still hanging out in the box, right? So in this case, right, we've got, let me just erase these boxes here. I think we all know about the boxes. So in this case, right, we also got another impulse to the downside, right? This move right here. Then we got the pullback. So we got our two pivots, right? We got our opening low pivot and our opening high after low. And on TRNR, it's the opposite, right? Because we got our high first, then our low. So we got our two pivots, and then we're just looking for, you know, moves out of that range. So in this case, we got volume. It broke to the downside. Trade happened, or the setup happened, right? Now, I didn't trade this because we didn't get our pullback in a retest. But it's also valid enough to do that. So right here, we see a move to the downside. Now, if I were to take this, my risk would be up here at the top of this candle. So I can always choose to wait on this one as well, or I can put a stop loss 2% or a buy stop 2% above the entry. Now, again, I switched out for like 2 seconds and then it just happened, which is just how it goes. But that would be the setup right here. So I've got a 3% take profit, and we'd have a 2% buy stop right here. So what is 2% on 6096? 0.6096. You know, I can probably short it on here, right? I think so. We're going to find out. I don't know if I can. Oh, I got to enable these. Silly goose. All right, so 3 and then 2. So basically, as soon as this breaks out, I'm just going to push the sell button. And then we'll see if that works. So you can see it's already calculating my outcome here, which is pretty cool. So if I had gotten in here, like if I was watching this in real time, and again, I can't push that button because my stop loss would be up here. So if I were to use the 2% take profit, I don't know if that would have been hit because I didn't calculate it yet, because I really just want to focus on this line being crossed. But I know I didn't hit the 3%. So I didn't get the profit on that one. I just don't know if it pulled back enough to be a stop out. So we shall see. So right now, again, because it's close to my line, I'm not getting in, like I'm not anticipating, but I'm also not looking at 10,000 different tickers and trying to distract myself. So I'm just looking at this line right here, and I'm looking at the shape, and I want to see the shape breach that line. So I'm going to look at the negative space right here and then just not think about anything as much as possible, because I just want to be focused on hitting the button. And I've got my position size, my stop loss, take profit, all that stuff is already figured out. So I don't have to do stuff. I also don't like that when you're in a short position, they call it a stop loss here. It should be a buy stop order. Silly, silly. All right, so we're just hanging out. Now this one is ideal. So if I can get in on this candle, like if this candle breaks below the line, and if I get in, right, and let's say the 2%'s up here, I can then justify moving that level down to make the risk even smaller, because I just want the the high of the entry candle or 2%, whichever one is smaller, to be my stop loss. So if I can get a risk range of like 1.5%, I'll move that line down and I'll just take that smaller risk. But right now it looks like it's just kind of pulling back up into the box. So I'm okay with that. We'll just hang out. So in this case, the market's just telling me, it's just not time to buy stuff, right? It's not time to short stuff. It's not time to buy. We're just going to let the market tell us when it's time to do stuff. And we may not get it. I do have a hard cutoff here in about 14 minutes, unfortunately. But again, the market is always going to be right. The chart will always have the final say. And right now it's just telling me there's nothing clean that I can trade. So you have to be comfortable just not getting opportunities as well. I don't know why it keeps moving that number. So, in this case, that's the best we can do. We can just let the market decide. I mean, you could trade the inside of the range here if you want, but I don't like doing that on low float trash. I like the breakouts because, as you can see with like Ruby, they tend to persist very well. So we'll just wait. And you can also make these smaller and all that stuff. Like you can just move your pivots up and things like that. But I'm just going to leave it where it is with the opening retracement because I want to know, are we going to get continuation for higher highs or are we going to get lower low or lower highs for a reversal as the price deflates? I got to set all this up again. Oopies. There we go. All right. And if I switch over to buy and sell, that's fine. But if I change tickers, then it resets this form. So what do we do in a situation like this, right? If we're let's say we're at work and we came into the bathroom and we're hiding, coworkers are trying to get in the door, get back to your desk. What are you doing? How can we make this happen without us needing to focus on a chart for a couple hours, right? Because this might take time. You might just not get a trade, and that's okay. So in that case, we can set orders ahead of time. Like we can put a limit buy order, or sorry, a sell order down here, and then add our brackets to that. And then that way, since market is open, the stop loss take profit will fill for us. So we don't have to sit here and focus and then manage the trade. And in a lot of cases, that's more efficient because then that's less of us getting in our own way. So in this case, I've got $5,000 on this paper trading account, and I haven't taken a single trade yet because I'm just waiting for this range to break and then for me to actually be focused on it when it does, because I keep changing between tabs there. So I need this to come down about 3 cents, 2.5 cents. So right now the chart is telling us to not do anything. So we can put some Spotify on. We can go check our email. We can do whatever we want to do. As long as the price isn't down here where we need to focus or up here where we need to focus, we're free to live our life, right? We can set alerts for ourselves. We can place orders ahead of time with brackets so we don't even have to open the broker and it'll just fill or it won't fill. That's also a very good quality of life improvement. Or we can just set an alert and come back to it so we can still focus on stuff that isn't the chart. Or we can sit here and just hang out and enjoy each other's company too. We don't have to constantly be doing stuff. And some days you just won't get a trade, and that's okay. You have to live with that. It's better than taking a loss. And if you don't see a trade and then you do take one and it's a loss, that's okay too. As long as you follow your plan, the probabilities here and all the system components that we have in place should leave us with a net profitable end result over a series of trades. And you can't let any one specific trade skew your perception of that system, right? If every part of that system leans in the favor of disproportionate risk reward and it's efficient, and you follow it, you should have a net positive end result over time. If not, then that just means that there's something within that system that is inefficient. So right now we're just watching the price kind of figure out what it wants to do. And I see big green candles and I see big red candles. So it's just one of those days. They're throwing haymakers at each other. And actually what I'm going to do here is I'm just going to use a quarter of the account, not 20%. I'm going to use 1250 here. Just so that there's 4 potential trades. And I want to show you guys something, if I can pull it up here in a second. I want to show you guys a specific thing, which is kind of why I'm doing this. Right? So I hope you guys can see this. This is an outcome matrix using this 3% take profit, 2% stop loss, right? Out of 4 trades, I can have 5 potential end results with this ratio. 3 of those are net positive if I take all 4 trades. 2 of them are negative outcomes at the end of the day if I take all 4 trades, and more than half of them are losses, okay? So I risk up to 2% of the entire portfolio. If I get 3 losses out of 4, then I'm down 0.75%. Otherwise, I'm positive for the day and can walk away with a profit. Now, because there are multiple losses in those last 2 scenarios, I know that I can stop trading after 1 loss and walk away with a net positive end result or a very tiny loss for the day. Right? And that's all I have to do in that case. So if I just want to take 1 trade, I'm either going to walk away with a win or a loss. Okay? If it's a win, I'm up 0.75% for the day. That compounds nicely. It's slightly less than I like personally. It's about half of what I like. I like about a 1.5%. But let's say you're on a larger account, 0.75% is great. You know, that could be a couple $1,000s if you're on a 6-figure account. If the first trade's a win, then we can unlock the second trade, and that will either be a win or a loss. If it's a win, we get 1.5% for the day. If it's a loss, we get 0.25% for the day. But we know to stop trading because we're walking away with something, right? If we win the second trade, we hit our daily goal of 1.5%. We can walk away at that point. Or we can take a third trade. Now, if I take the third trade and it's a win, I get 2.25%. I've beat my goal for the day. If that third trade is a loss, I walk away with 1% for the day. So it's 1 to 1.5% if I take 3 trades and the first 2 are wins. Okay. If I want to trade a 4th trade and it's a win, obviously I get 3% for the day and I walk away no matter what because I've used all my cash. If it's a loss, I walk away with 1.75% and I still beat my goal for the day. So that 3rd and 4th trade are completely optional. It just depends on whether or not I want to walk away with, 1% or 1.75%, risking that 3rd or 4th trade becoming a loss. Does that make sense? So this is a system now. It's not just an analysis strategy that we use to place buys and sells. It's a risk reward system. And if you look at that compared to like a disproportionate ratio here where you're taking 2% profit, 5% losses, 3 out of these 4 outcomes, even when you stop after 1 loss, most of these are red for the day. So I don't like that. I don't like the probability there. And in order to be net positive, I need to win at least half the trades. And if I take 1 loss, then I go negative for the day anyway. So this is not a favorable ratio. So I want to make sure that the odds are stacked in my favor as much as possible. Even if I do break even, if I stop after 1 loss, I get 1 outcome, which makes me negative, 1, which makes me break even. But I need at least 2 wins in order to be positive for the day. Whereas down here, I just need 1. So as soon as I get 1 win, I'm walking away with at least something, right? So I'm going to default to this because it's a lot cleaner and it's a lot more consistent in terms of taking something home. Does that make sense? And I'm not saying 3% and 2% are like gold or anything. I'm just saying for my ratio, for my system, it works really well because it makes it so that I can get my 1% goal with just 2 wins. So I still walk away with half my settled cash. All right. So in this case, TRNR is hanging out. It's consolidating a little bit. That's great. I like seeing that. This is compression of price. We got a little wedge, right? So if I draw this, you can see that we've got, I guess it kind of starts here, right? We've got a little wedge situation. We like wedges. We know there's potential for those. I would want this one to go to the downside because that's where it's shown the weakness. I want it to move to the downside and break out of this box so I can get my move from here to here. I don't need a whole like crazy move, right? I just need it to go from here to here. That's all I care about. While that is cooking, I'm going to pull up RUBI over here. And then I'm going to move that to the 2 minute as well. Get rid. Get rid. All right. Okay. So I've got my my brackets. I've changed this to extended hours. So everything is the same. All right. So in this case, we're nowhere near the bracket, right? And it's continuing to sell down. We're forming new lows. We're accelerating to the downside. And that's kind of why we want to stop out. If we do place that second buy, we want to have a hard stop just in case, because at that point you're in a heavy position. All right, so the wedge is showing weakness to the downside as well on TRNR. So this is good. This is what I want. I want this to sell down because for this paper trading account, I'm on a margin account, so I can short sell. I can't do that on a cash account, which is kind of why I wanted to use this account today. Because when we see that low garbagey volume pre-market, we tend to get red days. So I just wanted to be able to execute something in real time, but it's taken forever. So I don't know if I'll be able to. I got about 2 minutes here, unfortunately. Then I'll have to cut off the social media side of it. I was really hoping we could just get our quick move. But that's okay. All right. So we're chilling out here. This thing just likes to compress. It's not really moving, right? And if you look at this and you feel FOMO, that's a good opportunity to explore that FOMO and try to listen to the specific thoughts that are driving it, because this is not a clean chart. This is not something that we can use for good trades or for quality setups, right? A bunch of these candles have wicks all over them. Or if you zoom out, you're just kind of in a range, right? You're just kind of slapping around in there. There's no, like, you get higher lows, that's great. And that's kind of what we would like to see, but we haven't seen a break to the upside that's persisted yet. So even that justification doesn't hold water right now. So we got to wait. The only other thing you could do is trade little scalps based on volume within this range, or do something like the box strategy. So like right here, for example, that would have been a quick 3% out of the wedge, but it's sketchy, right? I want to trade the outside of the range because that's where it's got bigger potential. That's where it's got more range to move. We could trade it inside the range all day, but it's just not the same. I want quality moves. So in this case, unfortunately, it looks like we may just not get a good opportunity today on these on this chart. So let's see what SPY did. Did SPY respect its range? So we've got, it's hard to see here, but this is the cutoff right here. There's like a little separation there. Hopefully you guys can see that. So SPY started, well, it started here, you know, had some volatility, but the impulse, the pivot is right here. Okay, that's the high. And then we push down to here. Okay, does everybody see that? So if we look at these candles right here, we can see that the highest and the lowest range, and that's really what we're identifying. And then we're looking, once those are plotted, and we've got mechanical identification of those, meaning two candles on both sides of each pivot. That's the range. Then we can look for a break of the range. So in this case, looks like we got a break to the upside so far. Now it obviously pulled back, but that's more than enough to take some profit. And then we're just back in the range because the volume is garbage, right? So let's look at Tesla, because you guys like Tesla as well. So again, I'm just looking for the first move. So if you, we start here, right? And then we move down to here, okay? And you could even use this one here, but this one is more directional because it's, you got to wait for this one to validate. So did we break up or down? Looks like we broke to the upside. So we got some move there, and we got a good strong push on that candle. With options, that's enough to take some profit and just accept those small profits and walk away. We don't really want huge moves because this is a $400 stock. It's going to take quite a bit of move for this to move. So at this point, you're up. This stock's up maybe 1.5%, right, overall. But the options can have a lot more variance in price. So either way, there was a bullish breakout. We could have traded that, but you'd probably want to be out at this point, right? SPY, same thing. We got a bullish pop, good strong candle breaking out. We could have had a good easy opportunity there, but ultimately it did. Ultimately it did pull back. All right, let's see what else we got. Uber, we like Uber, right? So on this one, you've got a very easy pivot here and a very easy pivot there to identify. No breakout, no trade, right? Then you've got, let's see, Microsoft. Let's look at Microsoft, right? So we get our move, we pull down here, and then the the retracement here turned into a reversal. So that's where that would be, and then you just move this to the next area here because this is just a bigger impulse. So you got a break to the upside and then a break to the downside so far. So this one's a little bit of a unicorn, right? Because typically when you get a bearish move like that at open, a strong bearish move with the high before pre-market or before market open, you kind of hit the ground running with an impulse, and then that's the bottom of the impulse right there. You're supposed to see a pivot below this high, but in this case, it was too bullish, right? It just went up too high. There's too much ask pressure. So you just have to move the range is all. So let's see, what's TRNR up to? Did that move down yet? Not yet, but we're getting there. Let's see, that's 3. That's 2. All right, so I really got to get out of here, but I want to make sure that we can at least maybe get something here. AJ Roby 71 says, do you run these sessions on a daily basis? Join the channel just under an hour ago. Well, I'm glad you're here. Thursdays are supposed to be Lee's stream, but he just had a baby. So he's at the hospital with his wife. She had to go back in for something. So I'm covering for him on today, but usually Thursdays are his streams. I do my live trading on Tuesdays. And I have a small cash account follow along thing. I'm not trading on that account right now because I want to focus on this. Because I wanted to show you guys some short sell stuff, but we just didn't get our breakout. So kind of I don't want to say a waste, but I'm not losing anything by not trading. So it's a good opportunity to teach you guys. And we just didn't get a real-time example, unfortunately. So I stream for free on Tuesdays. I stream in premium on Mondays and Fridays at market open. And then Lee and Bull, so MadMaverick and the Swinging Bull, they're going to start streaming on Wednesday morning together. So that's going to be pretty cool. That's going to be starting next week. So yeah, we stream every day at market open. It's just a matter of who's doing it and whether or not it's on the free side or if it's in premium. So Tuesdays and Thursdays are free, basically. Yeah, no problem. I'm glad you're here. How long have you been trading? How's the market been treating you? I'm just putting you on the spot, day one. What's your biggest obstacle? We started looking at it earlier this year while on sick leave. Okay. Are you military? Basically, okay. All right, cool. I gotcha. All right. Well, I'm glad you're here. I mean, that's pretty cool though too, because you're in the UK, so your trading is in the afternoon. So that's nice. I'm a little jealous you don't have to wake up super early. By super early, I mean 9 o'clock. I get up way earlier. Well, it's good. So you're relatively new to the market, and that's a good thing, right? Because that means that you don't have any additional, habits that'll get in the way. So it's pretty good. We do have a free education channel. I'd recommend checking that out. There's a lot of information in there, but your best opportunity is going to be to show up to live streams. Way earlier, 8:55. You believe AI is coming for our jobs, so you want to get into something before that happens. Well, I think regardless of motivation, I think it's good for everybody to get into this sort of thing safely, right? So we don't want to gamble. We don't want to just rely on being right all the time. We have to develop a system which focuses on risk management and accumulating compounding gains that are achievable, right? It's a tortoise versus the hare situation 1,000 times over. So if I structure my trades in a way where I'm getting in when the price starts to move in the direction that makes me money. I'm staying in as it continues to do so, and I'm getting out when it stops doing that. And I've got a finite set of outcomes, three out of the four, provide me with a net positive result, and I can walk away after I take a loss or after my second successful trade. These numbers add up very, very nicely over time. It's a compounding thing, right? So you can see by this time next year, for example, on the small cash account that I'm trading, it's at like 700 right now, 716, 720, something like that. That should easily be six figures by next year. I can't say easily legally, but it should be six figures by next year, the way that I'm trading it. So, and it doesn't require a bunch of technical stuff. Like it's literally just shapes and colors, and then I push some buttons. So that's the idea, is a successful trader is able to walk away after two wins, right? An unsuccessful trader will probably lead into maybe two or three more losing trades after those first two trades are wins, right? So it's just knowing when to walk away, respecting stop losses, making sure that your losses don't go down 20, 30, 80%, and making sure that the position sizes are appropriate and consistent based on the risk. So that's really what makes someone a successful trader. It's not good guessing, and it's not, over allocating into something they have a lot of belief in, because beliefs can be misleading. And ultimately, you're just competing against a program, right? The program is just, it matches orders. Someone wants to buy something, someone wants to sell something. When there's an overlap, a trade happens, right? Someone's willing to pay something, someone wants that. You get a copy of that Excel sheet? Yeah, I'll give you a copy. So this is my small account tracker. So if you do look at it, I would recommend making a copy of it. So I'll copy the link here. I have it set to viewer so nobody goes in and changes the numbers. But if you open it, just click File here and then hit Make a Copy, and you'll have your own copy. And then you can edit it as you like. And I trade all these on these live streams like that. So all these trades are on here. Well, I can't say all of them. Most of them are on here. Sometimes, like if Lee's trading or something, I'll put it in the chat, or I'll put it maybe in the Lifetime channel. So I don't always share them on live streams, but I try to put all the trades and all the results in front of everybody so that there's full transparency here. And I don't trust anyone that doesn't show me proof, right? And I don't want you guys to do that either. So, and even then, don't trust me. That's the whole point of why I do this. I don't want you to trust anybody. Go out there, collect the data for yourself, and take the concepts in that I'm teaching you, and then put them under scrutiny. Collect the data, see if it makes sense, see if it's something you can do for yourself. If so, feel free to implement it. If not, poke holes in it. Let's have the conversation. Because I don't want you to do something that doesn't make sense to you. Which tab? It's the one. So I update the first two. Let me just zoom out here. So I update the ongoing and the current reset. And then the outcome matrix here is where I have my ratios plotted out. So I can just pick the ones that I like. I just like the 3 and 2. But the ongoing is where I put the current numbers for the account. So you'll notice before January 15th, the numbers were increasing, right? I started with $100 on December 15th. And then on the 14th, I had a personal emergency where I just had to literally just get up and run away from my computer to go handle something downstairs. And I blew up the account. And that's my fault. I was so heavily into something, and I didn't have my, it was an SPX, which is a very high risk ticker. And I didn't have stop losses in place, and I got double theta burned basically. So it is what it is. But we reset it down to 37.70, and then we built it back up. It's at like 16.48 today. So, so not a bad trajectory. Now 500 of that was added in as a contribution for February, because I increased the monthly contribution to get this account going a little bit quicker, just to make sure everyone knows the process works. It's just a matter of making it a little bit more efficient. So just adding a little bit more to it so it goes a little bit faster, so we can get to the compounding results a little bit faster, so everyone doesn't just fall asleep. And then that's it. It's just a matter of doing it every single day that opportunities present themselves. And it's a very simple strategy. I try to make it non-technical. this strategy here is a lot more technical than the boxes, right? So, but I also have a coaching program in premium for if and when you're ready. I'm not a sales guy, but I'll put it in front of you just so that you have it for reference. That is the premium link. I personally recommend people go into the coaching programs first rather than premium, because premium has a lot. But I don't have a coaching program that's at the $40 rate. I'm only in premium, unfortunately. But we do have a 50% discount for new customers. So if you want to, and again, don't even think about it right now, right? And that's not a sales gimmick or anything. I'm just straight up, just don't buy premium right now if you don't want to. But if you do, that is the code that you can use for 50% off. So that's all I'll say about the sales stuff, because I'm not a sales guy. But I do want everyone to have access to it. But this is where I teach my coaching stuff. That's where I teach my strategy and the trading plan, portfolio management stuff. I would personally encourage you to consider MadMaverick or Swinging Bulls coaching first before premium, because you can always upgrade, but might as well save some money and check it out first. And yeah, ask other people. Don't ask me if it's worth it. So thank you, Smoke. Yeah, I appreciate that. I appreciate you saying that. And that's good feedback for us too, because we don't want to charge money for stuff that you guys don't get value from. So, but if what I teach you can't pay for itself, then that means I'm doing something wrong. So that's my approach. But before we even get into all the money stuff anyway, just hang out, just be part of the community and show up to live streams, get that education. You're new to the market, so you're probably not going to know what you don't know yet. And I don't want you to hurt yourself. So I'm glad you're using paper account. And it's really just figuring out what works best for you, and then really, really tuning in on what's getting in the way, like your thought processes and your whatever your influences are when it comes to your decision making. Most of the time, it's going to be identity, and it's going to be an emotional response that's based on trauma. So just telling you up front. What we feed our decision making is what it becomes. So we have to reprogram that, and that's why I like the approach where we take small, consistent, and achievable gains over swinging for the fences on every trade and dumping 90% of our portfolio into 80% loss. So give me 1 second, guys. Hang on just one moment.